This is, of course, with respect to the con call which Anil Ambani just did a couple of moments ago. He says that the retail shareholding in Reliance Group continues. They've made an aggregate debt servicing of slightly over 35,000 crores since April 2018, and they're committed to repaying all the debts in a timely manner via asset monetization. Ajay is joining us to help us understand, the overall objective and the things that Anil Ambani said during the con call and the key takeaways. Ajay?
Karanya, if you analyze the brief yet very impactful messaging from Anil Ambani in this kind of an environment where, there have been casualties in the market, wherever there is slightest bit of, debt concern or liquidity concern, in some cases even insolvency concerns arising in the market is, punishing those stocks very badly. And we have seen the kind of shareholder value destruction which Anil Ambani Group stocks have also gone through. So it was a good attempt, I would say, Mr. Ambani coming on call and basically saying that 35,000 crore worth of repayment has been done. A large chunk out of that is principal and, interest alone. In a way, telling the market that I'm right here and taking efforts to repay to the lenders. In fact, we have to take this discussion forward with Sanjiv Bhasin, who's also joining in. Sanjiv, what did you make of the messaging from Mr. Ambani? Sure, they are trying hard to monetize their assets, but no takeaway that the appetite for such assets is also not very great, and the buyers are not very forthcoming. They are driving down valuation wherever there is any potential deal. In such a way, Anil Ambani Group company shareholders and lenders both are a worried lot.
Well, they ought to be worried. From its peak of market capitalization of close to 3.4 lakh crore, it's down to 30,000 crore, so 35,000 crore. So it tells you that you've lost 90% of your peak valuation, which tells you that, there is only distress. Now, yes, Anil Ambani is there and he's servicing his debt, but what's the return on equity or the return on capital shareholders have got? I think zilch. So it's a glass half full, half empty. If you have faith, then you stay on, but it's very difficult, Ajay, and it's telling you that the market has only rewarded the good and punished anywhere where there has been any coercion or any negative apathy. So market has been very discerning and, correctly so. The leaders are stocks which are pristine balance sheets, hardly any debt, and businesses which are roaring. And the bottom fall is always about the Anil Ambani Group and so on. So I think you can draw solace from the fact that he's there and he continues to service the debt. It should lay a little bit of fears on the banks which have a holding, but nothing aside from that.
Sanjeev, out of all the Anil Ambani Group companies listed right now, Home Finance, Infra, Arcom, whatever is left of it, where do you see relative value? Because the road ahead for most of these stocks also hinge on the fact that asset monetization transactions happen, which is kind of hinging a lot of hope on, and that will happen only where there is big value. So which are the stocks to watch out for or assets to watch out for which can yield them some value to repay to lenders?
So there has been enough value in a lot of his companies, whether it's Reliance Infra, whether it was Reliance Capital, but or Reliance Power. I mean, we have been one of the houses. I was one of the few who was bullish on Reliance Power, but has been totally dismayed because this time the quarterly results have shown a lot of group holdings and the impairment. So it tells you that cross holdings, there is not much cleanliness or visibility on a lot of things, which again makes the business murky. Until you cannot lock, stock and barrel in cash some of the value, asset monetization, till then the debt overhang will continue to be a, Damocles sword. At a time when yields are below 7%, Ajay, you would have expected that some of these companies should have shown better traction, but they are absolutely touching new lows, which is telling you that even though there is value, the people are very, very dismayed and there is no confidence which can, bring back the prices or the businesses.
Last question to address this point to you is about the messaging. Most promoters right now are in the middle of this liquidity / solvency / lack of confidence in the company and stock by the shareholder community is coming for. They are trying platforms to come and give messaging to the market, but market is just refusing to listen to them and value destruction is happening. how should retail investors who have such names in their portfolios consume this messaging, and what's the strategy for them? Even if ₹100 invested in this kind of a name or a basket becomes 80, is it prudent to at least exit then, or do you see some hope for value recovery, or how? Because I know for sure a large part of the market is stuck in these names or similar names.
So Ajay, it's a glass half full, half empty. We think the worst of the macros may have played out. Now you have a 90-day or a 100-day government, prerogative where they are going to allay a lot of fears on the liquidity. On the, the problem is not that much of liquidity as it is on the fear of passing on loans and not getting back and so on. So I think a lot of the sentiment is going to be improved by the government. You have a budget where the government can do a lot. And thirdly, we think that with a stable government, at least now asset monetization or cross deals will be a very, very big flavor, as you saw in the case of India Bulls, them selling their real estate. So yes, there will be huge big deals which will take place. It may take another 6 to 9 months before some of this fructification takes place, but I can only see a light at the end of the tunnel. I think the last quarter of this calendar year, that is October onwards, you should see a lot of traction on some of the mid caps, where I think that 2020 can be a benchmark year. So if you have held on to some of these murky names, please stay put, because I think there is a lot of light at the end of the tunnel. Promoters are in the realm of resolving a lot of issues with banks. We know all of their issues regarding NCLT, IBC are very powerful reforms, and promoters are sitting across the table and settling. And I can only see much better tidings for banks and some of the select mid caps where debt has been an overhang.
All right, Sanjeev, we'll let you go on that one. Thanks very much for analyzing the commentary coming in from Anil Ambani today regarding debt servicing. Guys, with that, it's back to you. Keep a watch on those stocks. There's some relief rally playing out for sure on Anil Ambani stocks today.
Most certainly, Ajay. Thanks a lot for helping our viewers as well understand the crux of what Anil Ambani was trying to convey through the con call as well.